Thank you so much, sir. With that, we move to the first panel of the day, and this panel shall deliberate on Beyond Borders, Global Venture Capital Trends and Cross-Border Investments. Probably one of the theme which is of utmost importance in today's day and age. And for this, ladies and gentlemen, please help me call in and welcome the panelists. Starting off, I shall be calling on all our panelists, and in the due course, I would also have the setup done. Kindly bear with me. All right, so while the setup is being done, just a little question, very informal one. Are you really looking forward to the pitching which happens post-lunch? No? Not really? You can be a little vocal about it. Yes, I am actually looking forward to it. I am actually looking forward to the great ideas and innovations and products maybe, and that might be added to my bucket list as well. Yeah? Okay. I really want to see some happy faces, some positivity in the air, but I'm still waiting for one. All right. I think our setup is almost done, and probably the right time to call in all our panelists over here. I would request, it's just a morning, Friday morning. We are about to enter the weekend. I do understand the energy, but I would appreciate if the energy, the vibe is a little more on the higher side. Ladies and gentlemen, please help me welcome our first panelist for this session. We have Mr. Nikhil Madan, the partner from Sustainable Impact Partners. Can I have a round of applause as I welcome him? Thank you, sir, for joining. All right, the energy was really, really low. I've got to be a little more strict now. Please put up your hands together, large and loud. Thank you. Please also help me call in our next panelist for this session, the founder and CEO of SandWest Caps Asset Management Fusion One Fund, Mr. Rakesh Gupta. Can I have a round of applause as I call upon Mr. Rakesh Gupta? Thank you, sir. Please also help me welcome our panelist, the founder and CEO of Transcom Capital, Mr. Ashish Shah. A round of applause, ladies and gentlemen. Thank you, sir, for joining. Since two of our panelists already has coffee, so would you be hoping, do you want some coffee as well? No? Yes? No? All right, all right. And this is the perfect time for me to call upon the chairperson and the moderator for this session, our very, very own. Please put up your hands together once again as I call upon the founder of Virtual INFOCOM, Mr. Arijit Bhattacharya. And I would request you to take this session forward. Thank you so much.
Before I sit, let me be there in my cozy position. Entrepreneurship is always like this. We actually don't like to sit in a cozy location. It's risky. We feel that we may fall down. But that's the fun part of it. We are always at the edge. Entrepreneurship for me is riding a tiger, wherein we adopt that cub when it is small. We feed it with milk. Eventually, we feel that it's going to grow big, and I need to feed probably with meat. Now it is not looking for small milk. That meat is money. So if you overfeed it, it's going to be really slow. If you underfeed it, it's going to probably ask more. It might attack you. Again, it's a risky affair. And when you talk about this meat, I think we have three amazing people who are feeding these tiger with money. So before I go very deep into it, I'll be requesting all our panelists, one by one, if you can kindly self-introduce yourself. I'll be starting with Ashish Bhai, Nikhil, and then definitely What should we call him? What's his name? Who can tell me? Super. Yes, Ashish bhai, please.
Yeah, hi, I'm Ashish Shah. I run Transcontinental Venture Fund. Before starting Transcontinental, I spent almost 20 years of my working life in the US, where I was working on the Wall Street, focusing on what is called special situations investing, which includes investing in stressed and distressed companies, restructuring them, turning them around, and selling them. So it's a deep value investment. You can get into these companies at a very reasonable value, but there is also a high risk. In 2008, I came back to India and started Transcontinental Capital. And in the initial years, as a part of a global special situations fund, I pioneered investments into the stressed and distressed companies because companies, just like people, get sick. But when people get sick, you go to a doctor, you go to a hospital, you get well. That happens in other parts of the world, but wasn't happening in India. So we started supporting companies which are fundamentally good companies, but had fallen on bad times because of circumstances outside their control. And we became the pioneers of investing in stressed and distressed companies, and we had a fairly decent success at that. However, dealing with Indian banks was very tedious. It was taking a year, in some cases 2 years, to resolve the banking situations with these companies. And so in 2014-15, we started another fund that focuses on mid-market companies, healthy companies. And we have we are industry agnostic. So we have invested in a fintech company, a software company, which provides SaaS-based services to the BFSI companies. We have invested in a software company that is in loyalty management. We have invested in auto parts. We have invested in micro irrigation. We have invested in milk processing. We have invested in quick service restaurants. So we are industry agnostic. What we look for is deep and fundamental value in these companies. We look for strong management, and we look for tailwinds from the industry where these companies can continue to grow for a considerable period of time. Okay, so that's what I do.
Good morning. Good morning. Get some energy in the room first. Come on, say good morning, everybody. Thank you. I'm Nikhil. I'm a serial entrepreneur turned investor. And probably for 23 years, I was an operator. Very much like a lot of people whom we're going to be seeing later today or already in the room. And then I had certain exits, so I created in my lifetime, I created 8 companies, 3 were tax optimized wind downs, 4 exits, and 1 is still in flight. And I'll probably take a moment to talk about that at the end of the introduction. So I'm basically an engineer by education with, like any other middle class Indian family, you get into management, but unfortunately I don't think I was ever designed for corporate, so my corporate experience is extraordinarily low. I'm a compulsive founder, and by 2015, 2016, I thought I've had enough. I've had exits. Why not recycle some part of the wealth that I had created back into the startup ecosystem? That led me to initially start investing as an angel. Then you become a little bit bold. You start becoming limited partners with funds. So we became partners with a couple of New York City-based funds, and ultimately became more and more sophisticated, became more fund manager myself. So we are currently holding 8 fund vintage. We are on the 9th fund, which is thematic, which is focused on sustainability, which is the theme of this year's INFOCOM. And we focus typically, so our previous 8 funds have been mostly generalistic fund. We've been technology focused, but investing relatively early stage. And this new fund, which is sustainability and impact focused, is predominantly focused on sustainability, impact, and ultimately, the way we see everything connects back to climate. So that's an area we're currently focusing on. I promised to tell you about the startup which I still continue to run, which is called Udash. This emerged out of the problem as an investor, what I saw. So as I said, I have a unique perspective. I've been on the operator side, raised serious capital during my operating days, and then of course became a capital allocator at some point in time. Now my whole fundraising was predicated on, during the operations time, was building relationships. The fact of the matter is, I couldn't convince my dad back in when I was in school to buy me a pair of Nike shoes, which used to be something huge back in the day. If I can't convince my dad to, fund me a little Nike shoe, how do you expect a perfect stranger like the 3 of us sitting in front of you to open our wallets and write a check to you? So I think that's probably going to be the theme of our line of questioning today. So I created a system where we use the relationship building, data-driven stories to help founders raise capital. Instead of schmoozing investors, you're actually working with investors to let your data tell your story. And surprisingly, you say that, okay, new companies, young born companies, 3 months old, we have a capacity to get more than 850 data points which help us make decisions on any startups that we can, obviously, I can talk about it later, but I'll let my other colleague introduce himself. So, thank you.
Good morning. Thank you, Nikhil, for this good morning. I'm Rakesh Gupta. I'm the founder CEO of Invest Caps Advisory Limited, which happens to be the flagship of the group. I do not have the kind of background with regard to typical investment what Nikhil and Ashish would have having. But where I come from is almost 3 decades of investment banking experience, ran some of the iconic global banks in India and overseas, been to multiple cities. Like Ashish was saying that, there would not be a place where I've not been to, kind of it. But after 3 decades of banking, and then one fine day I thought that I don't want to do any more corporate job. And then I became an idiot by going to Wharton, Columbia and Harvard. I'm not sure how many idiots would go to all 3 schools together. But what touched me is that when I was at Harvard, I picked up an article called "The World Loves Rebels with the Cause and Not the Rebels." And that's where I walked back to my room and I said that why don't I launch a CAPS advisory services company where the focus is deliverance and not discussions. And that's how we launched the capital advisory firm. We started doing limited deals across the world. That's where our strength is. We did a wonderful partnership with Sovereign Wealth Fund, which gives an outlay of $4.3 trillion to be invested across the world. So we hold that space, second to none in the world. We listed the first AI tech company in New York and become the fastest $1 trillion company in the world in 6 years. And today, when you look back, when you put the competitors, my competitors are Goldman Sachs and Morgan Stanley, one of them I worked for. And if I could look back a history of 500 years and 6 years, I think it's very different what we have done. Fast forward, I felt that because we do a ultra big ticket business in the world, we lost touch to a lot of small new businesses. And then we launched our own CAPS Advisory Fusion 1 fund, and which I'm sure will, you all would come to know more about it over a period of time. But the focus still remains is that look at the core business, which is a smaller ticket size. We also got the approval from Government of India, IFSCA Gandhinagar for $500 million fund. Our aim is to look at $1 billion in 12 to 18 months, deploy this money in a smaller ticket, 1 to 20 kind of ticket size in India, and contribute as much as to the startup world, because something we have overlooked over a period of time. On that note, I do look forward to interacting with some of the unique opportunities. I was in India, I'm still in India, but I came to India 10 days back as head of British Trade and Investment Delegation, and we were showcased some of the opportunities in Calcutta and Bangalore and Goa and whatnot. But as I look forward, we look forward to invest in these opportunities, and we look forward to contribute, coming back to India and contributing to India's ecosystem through the growth opportunities. Thank you.
Thank you so much for the lovely introduction. I'm not sure how many of you really feel the pain of an entrepreneur when they start. There are several different issues. Number one, family issues. People don't believe them, at least in this part of the Bharat, I would call. Second issue that they face is, am I sellable? Can I sell my dream? Can I sell myself? Number three, shall I go for funding, or shall I bootstrap it and then eventually I grow and then maybe I'll go for a banking methods, or maybe a debt fund, or maybe a VC route. Little bit of gray area. And I would say, when I look back to Kolkata ecosystem, I'll be very specific with Kolkata ecosystem. We have amazing startups, but somehow probably we don't promote them. I'm sorry about this statement. We don't promote them. I know personally several different companies who are doing pretty well. I saw them growing from literally zero to a hero. But somehow the mismatch is happening, right? And there's a big question in our mind. How we can get funding. I've been through this process several different times. But for the, I would say guru's mouth, I would be requesting Nikhil to please answer a question. What is the specific qualities, characteristics of a startup you will be looking for if you really want to invest in them? Is it the pitch deck? Some of them feel that if they have an amazing pitch deck, they will get funding. Some of them feel that if their business model is great, then they will be getting funding. Some people tell them, if you have a great team, probably, maybe you can crack it. What is the exact key points where you feel that these guys should get funding? Please.
Thank you, Arijit. I never expected that you're going to start with a curved ball. So, different investors have different metrics, or their brain fires differently with different areas of whether you want to. Some people get attracted by the pitch decks. For me, pitch decks are overrated. And this is again my personal preference here. I love data. Tell me what you've done, even if it's something as trivial from your point of view, maybe a tremendous value for me. The other aspect, which I think you briefly indicated, I think you provide an A team with a B product, it's going to fly. But if you give a B team an A product, it's not going to work out. So fundamentally at the stage that I operate in, for me team is important. But over and above that, the team is great only if they can very clearly elucidate for me how they're going to go from point A to point B. It doesn't have to be, I don't expect people to become another Facebook or whatever, Google or whatever else. But I'm only interested in a very small delta that is from A to B. I don't want to know what is going to be Z. I'm only interested from A to B, how is it that you're going to get there? And for me, I think that's something which drives my conversations further. And data, of course, at the underlying support infrastructure for that.
Beautiful. I'll go back to Mr. Ashish. Ashish bhai, I know you're a person who can see the future. The kind of investment you have done, the kind of investments you have done, you can see where it can go in next 10 years. That's not that easy. It's not an easy call. What exactly you have seen in these companies, and how do you filter them up? What are the qualities that you feel that takes you in a position, I should take this call and then gotta invest in this company? And I know that, so because I know him in person, I know that they don't only invest, but they help these companies to grow by giving connections. Over to you, sir.
So for full disclosure, we live in a world where I think besides God, nobody knows the future. It's moving very rapidly. We live in a very volatile world, from financial markets to the industry and technology to the geopolitics, right? And so what we look for is a deep value, as I said, and what it means for us is a long-term sustainable competitive advantage. It also means strong management, just like what Nikhil was saying. And it means products or services which are genuinely creating substantial value for the end customers. So if I may, I can quickly elaborate with some examples for you here. So we invested in an auto parts company. Now generally people don't think of auto parts with technology. We believe that this company has very deep technology, and it's a very interesting story. When they came to see us, they had revenues of around 20 crores, and they make pulleys out of sheet metal. And this is metal flow technology. So I said, who do you sell it to? They said, we sell it to Tata. And the most interestingly, they are a single source supplier, meaning if they shut down, Tata shuts down. So we said, okay, if you shut down, what happens? Who was Tata buying from before you started making these pulleys? So they said, Tata was importing it from Germany. And so I said, how much do you sell it to them for? They said, we sell it for 570 rupees. And how much Tata would have to pay if they were to import it from Germany? That was 750 rupees. So it was more than twice. So my next obvious question to them was that why would you not sell it to Germany? And so their answer was that our plant does not pass the German audits. Now, that is part of the story, but what makes it a defensible, long-term, sustainable advantage, competitive advantage story is, so I said, how did you get into it? Because there are less than a dozen companies around the world which can do this. And that is why they are a single source supplier today to many companies, and I'll come to it. So they said, we went to Germany for an exhibition, saw that they are making pulleys out of sheet metal instead of cast iron. And so we went to buy the machines. We had to buy 3 machines. Each was 8 crores. The revenue was 20 crores. So this is something they could not afford. So they said, let's make the machines in-house in India. So they persevered for 5 years and made the sheet metal pulley making machines in India. Okay. Post that, they didn't have these kind of clients, and the clients were not willing to share the designs. These are pretty highly engineered products, very, very highly engineered products. So they developed the design capability in-house, where today they are the design standards, not only for Tata, but also for Claas, which is one of the largest German farm equipment manufacturer, also for John Deere and many other companies, right? So They develop the pulley making machines, they develop the designs, they make the pulleys in-house. Now, when you have this kind of deep technology and vertical integration, it's very, very difficult for somebody to come and unlodge them. And because of that, so we invested in them, we gave them money to build a new plant, and they built a new facility in Pune. And fast forward to today, from no exports, today more than 40% of the sales come from exports. They come from John Deere, they come from Claas, they come from Navistar trucks, they come from International Harvester, and many other very marquee customers, and they're still single source to more than 70% of the customers, right? So just wanted to illustrate that we prefer deep value, and this is what in my mind is deep value, right? So that was the long-term sustainable competitive advantage. It's very difficult for somebody to undercut them. When you have this kind of low cost base, when you have your own designs, which are design standards for some of the large companies. Second point was we look for deep management. So if I may elaborate what Nikhil was saying, and some of the people here may not prefer it, but we have never invested in company where the management has less than 10 years of industry experience. And we believe that that is essential for somebody to build a company of size, right? Because the many very bright guys, nothing against them, but they don't have 10, 15 years of experience. And unfortunately in industry, things don't go just up, they also go down. So we prefer people who have managed a company on the way up. Just equally importantly, they've seen the downturns, so they know how to manage the company when the industry doesn't go the way you want it to go. And similarly, somebody can start a company, can manage people when they're at 5, 10, and 15 people, right? I mean, you don't need a big organization. Everybody knows what everybody else is doing. The founder is doing coding, and he's also going and selling the products, and finance guy is also helping with marketing, and marketing guy is also acting as, product developer. But that's not the same when you grow to a 300, 400, 500 people company. You have to learn and you have to know how to manage these companies, and then you have to go from a coder or from marketing your own products to actually becoming a manager who is going to manage the business. He's going to build the different departments. He's going to build the managerial structure where every 5 people, 8 people, 10 people, there is a supervisor on top, and on top of 5 supervisors is another person. He's taking reports, and he has to transition to financial management of these companies as well. So we prefer people who have industry experience in that particular industry, preferably with the same company for at least a few years, if not longer, and people who have built large, substantial companies. So that's the other thing we look for. And the third thing we look for is favorable industry dynamics. And in that, one thing that has stuck with me that Warren Buffett had said, which was that in a battle between a great manager and a bad industry, it is always the bad industry that prevails over a good manager, right? So it's very difficult to grow a company and be very profitable if your industry dynamics are not very good. And for example, somebody may have a great concept for carbon paper today, but carbon paper industry is non-existent, right? So maybe a great concept, great technology, a great manager, but that's not an industry we would invest in. So Rajit, these are the things we look for: long-term, deep, competitive advantage, strong management, and favorable industry dynamics.
Excellent. I mean, brilliant. To the point, properly defined. Now I have another probably dilemma which usually I get from many startups. There is a myth, or I don't know, maybe that's a fact. Some of the startups, they say that if my values are not aligning with the VC's values, or if the VC's focus or the investor's focus is not aligning with our kind of values, maybe there wouldn't be a win-win situation. We don't know what to do. So taking that clue, I'll go to Rakesh. When you look at a company, do you really feel that this should align with your vision, or do you feel that vision is something, but then you should look at the impact? What exactly you look at to a start?
Thanks, Harijit. Couple of things here, and they would speak for itself. I do believe what Nikhil was talking about, pitch deck being outdated. I think they are more like a shredding piece of paper. Because they always talk about big numbers, big projections. One day they'll break the ceiling, second day they'll break the sky. I don't know what next they'll break. But when I look back at our thoughts about our ethos to invest, the very basic we go with, is there a rebel cause there? Because that's why our global investors back us. We are backing of some of the iconic global players, including billionaires and everybody else. Are they going to be something different to the rest of the world, or they're also a part of the rat race? Now, something what you asked, the second part of the question is more difficult to the first part of the question, is that do we align with their vision, or do they need to align with my vision? Possibly here I will quote my personal experience with HSBC when I was with HSBC for a longer period, is that always encourage a discussion so that there is no space of dissent. Right? So when you have a non-alignment of vision, you have to understand from their perspective. And going back to the old school of thought, why 4 eyes are better than 2 eyes, is that maybe their vision is something which I am being blindfolded with my vision sitting in New York or London or wherever in the part of the world. Something which I am not able to capture from India, right? Or that space, because I have not been active in that space. So sometime if they take me through the journey, is that it's first of all, it's beyond the pitch story. Second is beyond the projected numbers. We all have seen the projected number story, how it can go haywire. But beyond that is the founder's alignment to the core objective of that venture. Is he going to hold on to long? Is he a long player, or is he something who is going to cut corners in today, tomorrow, or if somebody else gives a 10% premium, he says, thank you, goodbye, I have made 10%, and then the premium holds hosting, and then the reverse holding another 5-7%, so I have made my money. It's very good for people like us to come from a hardcore corporate finance major background, is that how you are making money, we understand that. So don't come and teach us how to cut corners kind of it.
True.
So that's where we see, and we don't force them to align with our vision. Sometimes we have changed our own path, saying that, okay, maybe your thought process is good. Like, I'll quote a very short example, is that I was invited to one of the private session in BTS, Bangalore Tech Summit, to a bunch of young entrepreneurs who are 27 kind of it. They created a wonderful drone technology, who is actually a rebel in its own rebel world. So in a way, somebody is sitting in Alipur's in his private lounge, AC, and not understanding what is happening. And somewhere the plant is in remote Kalyani. He has no idea what is happening there, right? To get a stock, what is happening, whether people are coming, what kind of gossiping is happening, whether the business is happening or not, he has to travel to Kalyani, or here if I could say, Ahmednagar in Maharashtra. So every time he has to go to Bombay and then take a connecting flight to Ahmednagar, go to the plant. These guys have created a unique drone kind of system, which would be put at a remote location, and from that remote location, that drone will oversee the entire factory. How many people have chipped in terms of coming in, and how many people have chipped out. What kind of discussions are happening, what kind of things are happening. And it could be wonderful proposition for any business entrepreneur who's sitting in Alipur and to track what is happening in Aurangabad or wherever it is, Ahmednagar. Now that technology is something which is non-aligned to our vision thoughts, because we have very hands-on kind of mindset. But I agreed to invest in that company personally, because I felt that that is a proposition which I could take it to London, New York, and it will be a wonderful proposition, because one is that the weather most of the time cancels the flight. So if somebody is sitting in London and this particular remote project is in Madison or kind of somewhere else, I'm not talking New York, Madison, I'm talking Newcastle outside Madison. So he's sitting in London in his own lounge, and we all know London weather, right? It's one of the most unwanted kind of part of the world. But he could still track down what is happening in this. So we have invested in that, clearly knowing that our visions are not aligned. But their vision is better than addressing the new fora where we are seeing the change. So that is something we align with that.
Brilliant. Excellent. Let me give you my story. I can't resist myself. Long back, it was probably 2004. We started taking real actor and models, converting them into a 3D digital character, and started making game out of it. Now, these games are basically coming from epic stories, Bharatiya epic stories. When I started talking to people, to be very honest, it was a crazy concept almost everywhere in eastern part of India. People started laughing. You know what happened after that? We have been backed by Intel. After that, Microsoft. They understood the entire concept. And I'm not sure how many of you know that we are the early level game producers of Ultrabook, when even the smartphone was not that upstandard, utilizing the GPUs. I had a lot of experience working with customs because they shipped us a couple of those smart screens which we are supposed to work on a coding, and that was stuck on the port because that didn't exist, at least in this part of India. So taking a clue from that part, I'm sorry to share my story, couldn't resist. Taking a clue from there, I'll go back to Nikhil. If you look at these kind of stories, there are short-term impact, there are long-term impact. Now, being a serial entrepreneur like yourself, and then eventually you bang on other, I would say, tiger riders, what is your focus if you look at a short-term gain and if you look at the long-term gain?
Again, I don't know, you have curved ball, stored all for me. Anyways, so by definition, first of all, I'm a venture capitalist, so by definition, we are not in a short-term game. We are looking at, in a best case scenario, our returns are coming 3 years. In a worst case scenario, never. Or median, you're looking at the fund life is like, 8 years, and then we may have, +2 extensions on that. So about 10 years, there's no sign of money. So anybody who decides to invest in a VC fund, be prepared that this is the worst and most illiquid form of investment you'll have. The returns are going to be high if they happen, but oftentimes it doesn't happen as well. But having said that, short-term and long-term, it's all about, for us, it becomes more like a portfolio construction strategy. Sometimes we take tactical positions, but oftentimes we are always thinking what is most likely going to happen, and again, nobody has a crystal ball in front of us, and worst part that the tech space changes every year. It's almost so difficult to keep up. So we try to do as much as possible in terms of keeping up to speed with what we are investing in. So it's very difficult. It becomes very situational for us.
Yep.
But there is one differentiation here. One of the clues that we look at is that if there's been a particular industry which hasn't really changed in last 60 years, 50 years, 70 years, 400 years, VC industry, does anybody know who was the first VC? It was probably 600 years ago, right? The Queen of Spain.
Yep.
So, I am very bullish on the construction industry, built environment right now, because I see we've been building buildings for more than 100 years in the same form. It hasn't evolved, it hasn't changed. So yes, that's an area I'm looking at very strongly. So there is a short and a long. It's very, very difficult to predict what is going to be the next big things. We generally, another idea which I could possibly give you is that if you're looking at technology, then you're looking at the Gartner curve. Is anybody familiar with the Gartner curve? Yeah, so we typically look uh, at the onset of the hype cycle, and most of the deaths happen at the at the down curve of the hype cycle. So I think this is, you just possibly look at those and try to make your own assessments on that. So it's very hard. It's probably the hardest thing to do.
Beautiful. Now I'll hop into probably Rakesh once again. Coming from technology background, working with deep technologies, this is going to be a little bit of different for you. What do you feel in next maybe 1 year? I'll not go beyond 1 year. The way Gen AI is evolved till date, and the way we look at least the SaaS industry is going to be different. So what do you think in next 1 year, what are the kind of emerging technologies you want to bang on? Forget about what's going to stay, what's going to happen, but what is your gut feeling? What do you feel? You're going to bang on a new technology wherein you feel that maybe you can create values, you can make money, or maybe the founder can make an impact. Yes, please.
I don't know. My first master's was PG DMIT from IMT Ghaziabad. I went to IMT Ghaziabad because I did not get IMC, and I refused to go to IMB. So I have done my master's tech when half of the world were not even knowing that what the world would be the other side, kind of it. But as you talked about that, where I would align in terms of Gen AI and other things, I go back to my to the genesis of SciInvest, which is about innovation, and innovation with a rebel mindset of a cause, addressing a cause. And I'll give you an example. So in July, late July, I bought a AI tech company in New York. In 3 months, the valuation has gone to 5x kind of it. I did not do anything different. I said, if you still go with the typical WhatsApp, chat, GPT, bot kind of mindset, your company in a year's time will be vanished. Right? What difference you are going to bring is something about integration of industry and giving a cross-functional exposure to people who want to use it. Incidentally, the team is very small, 27 people team, and generating 6.5 million revenue, which is very good for them. The point was that the moment they started integrating, they got their first big global multi-billion-dollar asset management company to use them as a back-end tool, which they have not been able to do because they were always in the same mode of chat GPT, just type it and get it. What happens is that this is also a role of an investor stroke entrepreneur to walk into and say, fine, what you guys are doing, I'm not going to change because that is not my core competency. My core competency is that I come back from what I look from outside. What changes I have done was fabulously confronted by OpenAI. And OpenAI came to me and said, I want to buy this company now because you are using my technology. And I said, I'm using OpenAI as a backend. So I'm not using your technology, first of all. Second, I'm paying for every use what I'm doing. So you can't come and tell me I want to buy your company. So the point here is that the moment you add innovation from the industry perspective, not only that proposition is attracted to industry, the people are more keen to get into that space of the business. And then your venture becomes far more acceptable, far more demanding. And that's where the scale of growth happens. The scale of growth doesn't happen that every year you grow 8 to 10% and say, I'm still growing. And I also don't want the scale of growth being, first year is 100% or 200% and the next 2 years is downward. I'm saying keep on adding the blocks, keep on adding the mindset. And as a investor, keep on giving the diverse opinion, not imposing your opinion, right? There are difference on that. And that is where I think they are doing well. So I give you an example why we feel that innovation, not per se, innovation from industry is making more interesting. And that's where we drive on.
Excellent. To you, Ashish bhai. You answered almost everything, but one quick tweak, little bit, if I may. allowed. Am I? Okay. So when you look at from the perspective of a person that I'm going to probably bang on this team, along with that, their business model probably have to be a little bit retweaked. If you can retweak that, this team is going to do amazing job. Have you taken such kind of decision? If yes, can you please explain a little bit extra on the top of it? Because there is a I would say myth in KOLKATA startups mindset that usually if they share and declare things to the prospective VC, they will lose probably their business.
No, Arijit, great question. And that happens on almost 70 to 80% of the investments we make. So we have a fairly detailed involvement and diligence upfront. And we go through the business plan very, very carefully. So as Nikhil was saying, data becomes very, very crucial for us. And we share our views with them. And if we have meeting of minds, and if they are willing to accept, and most of the times they realize it that I have a lot more gray hair and actually less hair than they have, and so the thoughts come with a lot of merit and a lot of reason behind it. So let me give you some examples, okay? So we invested in a fintech company that provides legal diligence SaaS-based products to banks, financial institutions, and BFSI companies. When we invested, they were 5 years old, and they have proprietary data. So they collect data from many, many sources, which is ephemeral data, which means the data has a very short life. It comes and it goes, and once it goes, nobody can catch it. When they came to us, they had 3 years of data. They were already selling it. And we looked at it and we said, look, you're looking for money. We want to actually invest more money than what you're looking for. But as a part of it, we want to stop selling and go into stealth mode and build the data, which is proprietary data, for a much longer period of time. Because then when you go to sell it, 2 things are going to happen. The banks and financial institutions want a longer data, so you will have it, so your selling is going to become easier. But more importantly, if anybody thinks that you have a great business and wants to replicate it, they just can't get the data, right? So you have a huge unfair advantage. So we actually tweaked the business plan. We gave them more money than what they were looking for. Initially, they thought we were trying to take a larger part of the company. Then they realized it. We kept it in stealth mode for 4 more years. We came out 3 years ago and started selling again with 7 years of data. Today we have 10 years of data, more than 10 billion pieces of data.
Wow.
And because of that, the customers for that company are who's who. I mean, whether it's HDFC Bank, whether it is Kotak, whether it is Punjab National Bank, whether it is Mahindra Finance, all of these guys are clients because nobody else can provide it. So again, it goes back to our thesis. It's a very long-term, sustainable competitive advantage. We had to convince them that this is probably better for them. We gave them more money than what they were looking for. But this happens very, very regularly, right? So in many instances, we work with the company. We share our views on how we can refine the business model. If they believe that we would be able to create more value, and we have a meeting of minds. We never invest if there is friction. They have to genuinely believe, and we have to genuinely believe, right? Let me give you another example. Another company, which was a software company based out of Delhi. They make loyalty management software. And they came to us and they had a business plan. And their plan showed them growing from 70 to almost 450 people. And we said, you'll need more money. And the reason why you'll need more money is when you build so many people. So they said, okay, I have 5 people in marketing today. Tomorrow with this scale, I need 50 people in marketing. and I have 10 people in software development, I'll need 100 people in software development. And we said, wait, that's not how companies get built. When you add 50 people, for every 5 or 6 or 7 people in marketing, you'll need a supervisor, you'll need a manager. And over 5 managers, you'll need a vice president. And then on 5 of those, you'll need a head of marketing. And each of these layers is going to actually cost you more than what the lower level layers are. And this is going to happen across a company. So when you actually think about an organization that is going to be required, the money you'll need is more, because you'll actually need more people, and these will be higher paid people. And so yes, I mean, to give you a short answer, many times, almost always, we work with the companies, see if we have any views to make the business better, and if we all agree, then that happens.
Super. I think a lot of wisdom is flowing in this panel. It's not the information. I'll take the last question to 3 of you. Last question. But I need answer within maybe 2 sentences. Yeah. If we look at the ESG, what exactly the role of ESG when you play your investment decisions? Is it, I mean, maybe I'll start with Nikhil, go to Ashish Bhai, then Rakesh. 2 sentences, please.
So regulatory pressure, simple. And of course, ultimately, as I said, everything connects back to climate. So governance is an area, ESG, the third leg is governance, and I'll reserve my comments on that. So my 2 sentences are over.
Thank you.
Yeah, I'll give you I'll try to give you a short answer. The short answer is as an investor, we cannot look at a company which we don't believe is going to be ESG compliant today and 10 years from today. That's just not an option. And secondly, as Nikhil was saying, regulatory compliance is actually ahead of where many of the companies and many of the industries are in India. And so we had a survey done by our law firm for an investment we were making in Gujarat. And there are more than 120 regulations that you have to comply with, whether it's at the central level, state level, district level, right? So environmentally, I think the regulations are quite ahead. On governance also, we take board responsibilities very seriously. We ensure that there's not a rubber stamp board, but there are people who actually ask meaningful questions and understand the industry and have views which can add value. So short answer is, I mean, there's no escaping very strong ESG standards where we invest.
Thank you.
I did not expect this point to come through because I speak on this subject quite often on behalf of World Bank, because I'm on the external board advisory on World Bank on ESG and SDG. But to one line on the point what you said, the belief in ESG is so much from our end that our fund has allocated 30% on impact and sustainability, part of it under the ESG program. And we look forward that while governance is something which Nikhil said, and I would go one step ahead, is about financial prudence, which is a core part of governance, which is completely missing, and I will reserve my comment beyond on this. Thank you.
Thank you so much. Thanks for the lovely panel. Thank you so much.
Well, after a panel discussion, when we actually have a little giggles, it actually shows the energy, and it actually shows it went off very, very smooth. Well, for this absolutely engaging session, we have a little token of love and appreciation for all our panelists. May I please request our moderator for this session, Mr. Arijit Bhattacharya, to kindly do the honors of showing our love and respect to all the panelists over here. Starting off with Mr. Nikhil Madan, the partner of Sustainable Impact Partners. Can I have a round of applause, everybody? I'm sure you enjoyed his thoughts. Thank you. I would also request to kindly hand over our way of showing our love to Mr. Rakesh Gupta. And of course, to our panelist, Mr. Ashish Shah. A little louder, everybody. Let us make everybody feel the presence here. Thank you so much, thank you. Do we have any questions from our audience for our panelists? Though we have actually ended the session, but if there is any, then probably we can take that offline. Thank you so much.